Hello and good afternoon, everybody. I have a bit of a break and I thought I would take a minute to recap my trades in natural gas today. I was trading the tracking ETN UGAZ UGAZ. And I'm not incredibly impressed with myself today, other than I only walked away with a 99-cent loss. I didn't have as much time as I sometimes do, and the way that I normally trade during the day, because I'm doing a lot of other things, is by setting alerts that notify me when I should buy or when I should sell, and I'll take a quick break, hop on, and place my order if things look appropriate, or sell if things look appropriate. This morning I started off with a nice trade, bought in a bit there before the open and sold out as the price approached the 200 moving average. And then I sold that just before the report, and I was anticipating a recovery back up to that previous price point because I had developed a bullish bias for natural gas for a variety of reasons. So I expected that it would come down, make that low, and reverse back up. And that's something important to take into consideration and monitor in your own trading. It doesn't help you typically to develop a bias and stick with it, particularly when the price action is moving against you. And I am okay with my trades today because I also sometimes sell out of a trade too early, and then it either does make the move that I expected it to, or it makes a somewhat smaller move, and I would have not lost the amount had I sold out of panic selling. Sorry, I'm a bit distracted today. This is a really busy day for me. But as so you can see here, I made 99 cents. That initial trade was about $110 profit, which was great. Bought down here at 44.09, thinking that we were going to push back up over the moving averages. Dropped back down as soon as it started to push back up over resistance again. I anticipated that becoming support, and that white line there is the 50 moving average. And the price did bounce off of that, so I went ahead and added to my position there and waited for a move up, but like I said, that never came, and obviously you can see that. So let's pop over here real quick to the natural gas 5-day 5-minute chart. So part of the reason that I developed the bias that the price could rise today is that we saw natural gas moving through my hypothetical zones here. These were all based on low order flow nodes on the TPO profile. And I had seen low order flow areas higher up in this area where we had a gap down previously. So early in the morning, I got it in my head that natural gas would likely push up into this area today because the report was being released and there was a low order flow node, and also the coming months futures contracts are trading higher. I had also read a couple of reports that were saying that production was dropping down, and I talked about that in an earlier video. So
all of those things were and are still possible. The price could overnight still pop back up into this end of the channel before returning back down again. The problem, I guess, with this trade is that that it didn't happen, and instead of switching over to DGAZ, where I could have had much bigger moves and ended the day more profitably, I decided to hang on to this trade. Which is not necessarily a horrible thing, because like I said, at the end of the day, I only lost 99 cents on it, but that's really not why I'm in the game. Hang on, I wrote down a couple of things that I wanted to go over on this trade in particular, because it's something that happens to me fairly regularly, and I want to try to help other traders avoid these same issues if possible, because I think that they're fairly common. Sorry, I think earlier I said that was the 5-day 5-minute chart, but that was actually the 20-day 1 hour. This is the 5-day 5-minute chart. So here we can see the hypothetical zone I had drawn out. When I initially bought in before in the pre-market, it had been because the price looked like it was developing a fresh demand zone here in the low order flow node area. And I bought in there, sold up in this area before the report, and then bought back in around here because I anticipated this being the new zone. However, earlier in the week, natural gas had gone down to a lower point, maybe 2 weeks back, to 1.83. So it would have been more prudent for me to wait to see if it respected this low here, and then waited to enter until it retested this bottom twice and then progressed upwards. That would have been a much more profitable trade for me. As you can see, natural gas did uptrend during the day, and I opted to not sell my position for a loss because it didn't push further below after testing this this new resistance or support 2 times during the day. So I'm a little flustered today. I apologize. But overall, I am going to consider that a success, because when I first started trading, I had a tendency to end the days really red, and I think that has been my biggest area of progress over the last 6 months, is in cutting when I should cut, but not cutting unnecessarily. So I'm not advocating holding on to a position that is constantly declining for the entire day. But if you can come up with a good solid justification that holds water as to why you are staying in a trade, then by all means do that. But another thing to consider is that if you've bought in right around here and it breaks below what you thought was the support level, I could have sold out here for about a $25 loss and then waited for that double retest, bought back in, and ended with about a $200 profit. So it was okay for me to stay in. I had good reasoning, but at the end of the day, I would have reached my goals, my profit goals for the day, if I had sold here, bought back in here, and held through here. Or alternatively, sold here, hopped over to DGAS, bought in, sold when it showed signs of reversing, and then switched back over to UGAS. But as you go on as a trader, you'll find that it's actually pretty difficult to get yourself to swap back and forth so frequently during the day. Some days I'm much better at it than others. Today was not one of those days. So I'm just going to quickly go over the list of things that I wrote down for myself about this trade while I was observing it. I hope that you find it helpful. And if you're enjoying these videos so far, please hit the like button and tell your friends. As my trading improves, I hope that yours does as well, and that we can be a supportive, helpful community for each other. I'm just going to rush through this really quickly because I'm on my break and I need to hop back into work. So because natural gas moves so quickly, when you feel really confident in a direction, I think that it's important to be in a position and also to set your stop losses, because if it had fallen down past this level, it would have been really important to get out immediately, because there's not much at all below that until we hit 1.86. But if you feel strongly about a direction, you should definitely get in the trade if possible. And it's okay to get in with a small position. On this one, I only entered with 200 shares because I didn't feel confident. I was below the moving averages and right near support, so I didn't want to risk it falling below, which it did. And that was another reason I felt comfortable holding on to the trade, was that it wasn't down a substantial amount of money. And the general area that I place a stop loss is typically at what would equal half my normal daily profits. So think about what you make on an average day and cut that in half. That's where I place my stop losses. Unless it's associated with the bottom of a zone or an important support or resistance level. It's kind of a combination of all of those things. So this trade, the most important thing I think that we can take away from it is to not hold on to biases. This trade really wasn't worth it. I'm not upset at the end of the day because, like I said, I only lost 99 cents, but I could have done much better and I could have been in another trade. So my bias was that natural gas was going to go up substantially, and it didn't. I should have probably picked something else to work with today. Make sure that you reevaluate each trade after you enter and decide what's happening and whether or not it's worth your time. What's your reason for being in the trade? Are you in it because you're looking for more gains? You're looking to recover losses? You're looking to break even? Is this trade worth it for you? At a certain point in the day, I was looking to recover my losses because it had turned around. And that was the reason that I stayed in. I made a conscious choice to hold on until the end of the day to see if I could come back for a profit or decrease my losses, which is why I chose to buy back in after it pushed over the 50 moving average. I felt like the probability had increased and that I might be able to recover or end the day with a win. I'm not gonna take the time to get very far into the breakdown of each candle, but again, I wanna highlight that each candle has a lot of information for you about the price action, and I highly recommend that you take the time to study candle patterns. They've been really helpful for me in learning how to be a price action discretionary trader. Sorry, I wrote down a bunch of things for myself here. Oh, I guess that's it. Sorry for the pause there at the end. And I hope that you find this recap to have been helpful. I'm going to try to find a tripod somewhere in my house this week so you don't have to watch the shaky videos. Sorry, I hope I didn't make anybody sick there. Once again, I hope everybody has a fantastic day. If you found value in the video, please take a minute to hit the like button and subscribe to my channel. I'm going to keep trying to post updates and trade recaps as I progress in my trading journey, and I hope you all have a fantastic day. Talk to you later. Bye.